TGIF Warriors.
Wait. You freaking called it, coach. That's all I have to say. It's
Uh,
as sad as it is,
yeah.
what's happening today. I just want to say, well done.
Thanks, Blake. So, yes, we have a war, and we're going to have not only tweets, but now we have war news to trade around. Some big moves, and you know, even the dollar flipped. Yesterday, I came out of all dollar shorts and put out feelers in the Dixie. I'll show you the chart in a minute. I'm going to just say good morning to everybody. And, you know, brave new world we're in. How you doing, Mike, Ingmar, Kurt? There's certain things I don't like to be right about. This is one. K-Man, how are you? Ryan, Bran, uh, Blake, you really mean it. Hi, James, AJ. Payman, how are you? Be safe out there. Don't go to Iran. Steve, how are you? Timothy. Okay, Timothy, welcome. I've never seen your name before. All right, George. Okay, Brian, Laura, how are you? Everett. Okay. All right, so let's talk about markets now. Hi, Ren. Okay. I thought I'd start off with the dollar. So, we did not have divergence down here in the 4 hour, but it was pretty glaring on the daily. So, I didn't know yesterday there was going to be an attack, but see this glaring divergence. It's still not a reversal week. We'll see what happens by the end of the day. But I'm looking at this as drive two. Here's one, here's two. And I think we're going to have really shake out. Now there's a narrative to really shake out uh, all the bears. I'm not sure if this is going to be the bottom, but I think we could see a rally back to here or here and then have a final plunge. Maybe that'll be after things settle down, if they ever do settle down. Um, and so, Euro came as close as you can really come. And see, you have the divergence there on the daily. You don't have it on the 4 hour. And then I guess we have to address what's happening in WTI. And Blake, you guys had a nice pattern in play before this happened. So I
Yeah,
mean, yeah.
yeah. I
So
mean,
it,
obviously you
uh,
don't it it's you don't expect these types of things to happen. This is, we always talk about the what ifs, I think, on this on the show. I think you're really, really efficient at saying, hey, what if this happens? What if this happens? That's, all of us do
yeah.
talk about these types of things. And yeah, crude, it feels like crude was kind of sniffing this out days ahead of time. And maybe there is some smart money in there, or informed money that knew what Israel was going to do. I don't know, but
This
it's
was another wrong-footed market before this happened.
yeah.
I remember, I bought crude on the crash day here. I had to be, and then I was aggravated. I let it slip away, but I stayed with it. And then I grew confident in this area, real confident, because the market had this kind of give back in a week and they couldn't break it. It was just sideways chop. They went stop hunting a few times, but then, especially on this candle, that was a breakout. I thought I had breakouts a few times, and they didn't follow through. But this candle, I think that if you use clouds, it actually broke out the upper side of a cloud. Someone showed a tweet, and that you never know where a market could go when it breaks those Ichimoku clouds. That's something I could probably ask K-Man about. Um, we're getting a little bit of hit and risk. It's fought its way back. Probably, yeah, probably have to. It was another dip to buy, like every other pullback, but be careful. This is at 59.20 level that if this gives way, we'll have the correction. But, you know, I'm not sure that we're going to fail. I have some shorts on. Google was one of them, and I think it's coming in. Watch the mags because Google, I think, is going to kind of gap open. Yeah, there it is. Talked about this earlier in the week. So we'll see. I really, for what's going on, I guess the S&P is down 50 is no big deal yet. It's all going to be about the close, and we'll see what happens. Want to go the team and Ryan. Uh, are you doing any dip buying, any of the levels? So this was like your level at 115. So if you break through 115 and then pull back to it, is old resistance new support at 115?
Well, yeah, I've actually just lost 6 pips trying to short on the other side of it after it broke. I think, yeah, it's if this had happened without this news, then the world and his mate would be buying at 115 because that's what everyone was waiting for yesterday.
Right.
Because we've got this news, it's come off all this way. You could say, would it have come down to 115 if we didn't have this news? The level's interesting still, but you've got to take it in the context of what's going on with these headlines.
Yeah.
We're not breaking it. We're not holding a break underneath it. So technically
Right.
it's doing okay. But, another errant headline and we could be down at 114. And there's going to be a lot of risk going into the weekend now in terms of what might happen. So, yeah, this is one of those dangerous moments when traders go, oh, yeah, I want to buy a dip. I want to buy a dip. I want to buy a dip. And then, something happens and that's when you get tipped out. So just be careful. At some
Yeah.
point, touch wood, things should calm down. And if things calm down, then we probably go back to what we were doing before, which is rallying. But
Okay.
it's another reason that you can't ever count out the dollar because as soon as the shit hits the fan, where does everyone go running to?
Yeah. Isn't it amazing what an ocean will do for a currency?
Yep, absolutely.
Or or
I
or when the ocean tide goes out, you see who's not
who's
long
making.
dollars, right?
Yeah, and this would
To
actually,
use your analogy.
yeah, this the RSI would augur for another push up on this time frame because that was a confirmed high.
Yeah.
So, we'll see. Just don't be stubborn in this environment. Okay, that's really and be open to both sides of the market so that you're, not just really locked into your narrative and no matter what, and still have your stops in there. So,
There should be
we'll
one.
see.
There should be one thing that traders should have in their mind today. Okay, where do they want to be at the end of the day, going into a weekend? That should be everything a trader should be focusing on now. How do you want to be positioned going into the weekend? Do you want to have a position at all? You can always
Yeah,
put it back on on Monday if nothing's happened.
yeah, and you may not know how you want to go home until the end of the day.
Yep.
It's a long day between now and the S&P close. Copper's getting hit pretty good. And if I want to be real controversial again, I unveiled this on Real Vision, and everyone will think I'm crazy, but I'll show it. I'm not saying silver is topped, okay, but check out the megaphone in silver. So, the megaphone says there's room up here to keep going, but you look at the weekly, silver has been diverging, unlike gold. Gold's confirming its size. So anyway, regardless of what it does up here, look at all the confluence happening here at 26. I know most people would say, oh, it's never going back to 26, but in this environment, who knows? I mean, if we had some type of, yields are cooperating. If we have any kind of slowdown, it's possible. And, this isn't that much different than the megaphone that we had in the S&Ps when it, was definitely contrarian. I would say this is contrarian. Um, especially with the gold silver ratio really collapsing, but now we're getting a rally right back from the breakout. So anyway, just keep an open mind. And if you're long silver, it should make you think about how do I protect my profits now? Okay. Not how much more aggressive I want to get up here, but I was long. It was a huge move from April 28 to almost 38, $10 in silver in 2 months is a huge move. I know people are talking bigger numbers, three figures, whatever, but if you're long silver, protect those profits. And I'll say do what Celios does. He takes partial profits, he holds a core position, and then if there's a pullback, he's recommitting. So just follow his lead. He's been trading it like a champ. So has K-Man for that matter. And let me say good morning.
Thank you,
How are
sir.
you,
Good
K-Man?
morning.
How are you, buddy?
Yeah, very well, thank you. I have
Uh,
done pretty much the same, different levels, but yeah, I'm back to my core and see what happens now on
okay,
silver.
okay. So yeah, so you lighten up, you book profits, and
I do it constantly. I'm
yeah,
slice and dice and jobbing it in
yeah,
and out and constantly.
okay. Let me ask you this: any view on what's happening here in U.S. dollar yen?
Uh, well, you know what? That's another one where this market is kind of sanguine. Yeah. And okay, it's probably the fact that people were selling dollar yen into the news, and then you don't want this. It's one of those cases where you don't want to be short nor long risk really going into the weekend because we were talking about it like in length, and the thing is anything can happen over the weekend. I mean, the worst imaginable could happen, but also someone could all of a sudden go and sit around the table and then you wake up to a completely different market on Monday. It's not likely because it's the Middle East and those countries they don't lay down their weapons easily. So yeah, I mean, but yeah, the question is, where do we wake up on Monday? And that's going to, I think, hold back a lot of people to at least add to positions. But just just to reiterate what we've been seeing over the last years is talking about that oil. We've seen those kind of spikes in the past 3 years. Due to Russia and Ukraine. And when the dust settles, those spikes have been relatively short-lived in time. So is it going to be the same, or are we going this time into something really bad and then we hit 80 or $82 relatively quickly?
Yeah, I mean, I had this trend line drawn for a while. It still
Mm,
amazes me how it respects it. I mean,
mm.
it got close to it. My
Where does
experience,
that start from? 2022, Russia, Ukraine, or
I don't think it's that long term.
oh, okay.
But let me look.
Because if you take it from 2022 when it started, it is really all those highs got rejected all the time, and every time the high was a little lower than the prior one.
Yeah,
But don't you have to be a little bit careful here because of the contracts and
the
um
rollovers.
yeah, rollovers and
Yeah,
stuff. I mean,
possibly, but we had them
yeah.
in prior months too. No, but the thing is, this could be. This looks. It's not worse. Any war is extremely bad, but this thing looks a bit. Where it is geographically, it looks the potential for something really bad happening is seemingly a bit higher, and it could be somewhere the contracts as well. But um, yeah,
Well,
at least I'm not going to sell oil before before the weekend. That's for sure.
yeah, I have seen examples. In fact, in the war that Blake fought in Desert Storm, you had a build up into the beginning of hostilities.
Mm,
And when Desert Storm began,
mm,
crude and gold peaked
yeah.
and the bonds bottomed. I've seen this before where this hasn't, there's been enough time for things to build up to
Mm,
this, even though a lot of people thought it wouldn't happen. So I would say at least short term that 75 is a high.
yeah.
And I hope that they could resolve it. But if things cool off over
Oh,
the
then take it
weekend,
back to $60, huh?
uh, maybe 67,
Mm,
65. I would buy a break because I think eventually we're taking this 75 out,
mm.
and actually the move would measure 95
You know,
if we take it out
it
95.
was bubbling last week. Mark and I in our chat room just before I left, we had bids in actually in oil to buy it somewhere around $62, which we didn't get, but and I took my bids out. Something was bubbling already before this happened. Last week we were talking about it, saying that wow, this time we may not stop at 63, 4, 5 anymore, but rush through and. Of course, there was another catalyst, but already before it was happening, right? So, yeah, perhaps back down there at your 65, 62 and a half or so, we're gonna find bids again on this move if we get down there and if things cool down, right?
A lot of ifs.
Oh yeah, there's a lot of ifs today, a lot.
So
And
I
you know
think you have
what, Dale, as well, you were saying that we have seen that, and you're right in saying even going back to Desert Storm because you and I were there. Um, That
well,
is, I think, one of the reasons why the FX markets are relatively subdued. The other reason is that there's heaps more money in the market now, and that people still have a global bias, which is probably still for a bit of a weaker dollar down the line. But I think having seen it all and having had that Russian Ukraine example as well, I think this is one of the reasons why the currencies haven't been reacting the way they react to other or reacted to other surprises. I mean, look, if at the start of Russia Ukraine, the impact on the yen, for instance, or Swiss was much bigger than the one we see now, right?
Well, and I want to jump in here because look at the
grab
bond
them, bro.
market. Yeah, look at how calm the bond market is. I mean, this right here is just telling you whether you're looking at the 30 year or the 10-year, bonds are barely even bid right now. I
Yeah,
mean,
that's interesting.
there is, definitely a calm in the market, which is surprising based on what has happened. And yeah, the S&Ps are down 1%. So what? Maybe it's because people don't believe the escalation is going to be too great between Israel and Iran. And if you think about it from a military point of view, they don't have, unless we're going straight up nuclear, then we're all screwed. I mean, really. I mean, we let's be real here. Unless nukes are going to start getting thrown, we're all screwed. But from a military point of view, nothing is probably going to happen past lobbing a few bombs at each other. They don't have the military capacity, and nor does anybody around them have the appetite to really push it any further. So just think about that, guys. I mean, people always, oh, they're gonna throw nukes, everybody's gonna hit the big red button. Look, people are human, and humans instinctively are about self-preservation. And if you throw a nuke at one person, you're gonna get a nuke thrown right back at you, and you're gonna be obliterated. So no one's gonna be pressing the big red button. Let's just make sure we get that out of the way. And that's why the markets are like, yeah, okay, it's a it's a risk over the weekend that things might accelerate a little bit. But is shit gonna hit the fan? No, it isn't. And let's just be 100% clear about that. And if it does, we are all screwed. I know people like to warmonger and scare everybody, and you're gonna hear people scaring you all weekend long. But be real. And I just want to end with that. And hopefully it ends peacefully. And I think there's a very high percentage chance that by the end of the weekend or by next week, things are going to calm down precipitously. And I know some of you are sitting there, no, but no, Iran's pissed off and of course they are. They've been pissed off at each other for, tell me how many years, Dale?
Oh, this war was a,
Yeah.
oh, it's probably 20 years.
Okay. And let's add a few hundred probably years on top of it. I don't know.
Oh, okay.
I don't know. I'm just saying that in all actuality, in all reality, you understand why the markets are relatively calm. Again, go look at the bond market. Go look at the bond market's probably the best place to look. But I want to talk about a couple other things. Speaking of which, and that's why, and I want to clarify something. I was not in Desert Storm. I was in School of Infantry
Oh,
as the
okay.
ground war ended. Then I went to Guam because I didn't have to go pick up bodies, dead bodies, that is, in Iraq. I went to Guam for a year, but then I was in the Great Somali War, which is actually Operation Restore Hope, which so no, I wasn't in, but I was 18 years old at that time, 19 years old. Um, just to clarify, and going back to the markets, I want to talk a little bit about the dollar because last night the dollar ripped, and and the euro is coming back too. We do technically have a little bit of a false breakdown in the dollar index. I agree with everything that you guys have said. The bearish trend is not over. However, if you weren't, getting into dollars yesterday, like we were, this is the time that you got to be going, okay, I don't know if I really want to chase the dollar higher either. I don't know where the downside's going to end in the euro, but I will tell you, I'm attracted to the 114, 114 level. And if we make it somewhere down there, that is going to be a level that I'm looking to be on the long side of the euro. Because going back to what Ryan and K-Man were saying on the Flow Show and what uh, you know Dale, Ryan, and K-Man were just all talking about a little bit ago when we started this show, when the dust settles, people are going to go back to doing what they were doing, which is buying equities and selling dollars. And so if we see the euro trade down towards 114.16, that's a 38% retracement of this move. And remember, the trend is, is overall is still bearish for the dollar and bullish for the euro. So buying euro dips still makes sense to me. But if you were in the Forex Analytics chat room, you know that I just closed out and you can see what everybody's doing, what trades everybody's doing right here. And like earlier when I got up this morning, I'm closing out all my dollar longs. I closed them all out, but I do have a hedge, and I'll leave that for the Forex Analytics community. If you want to be part of the community, it's $1 for 10 days. If you weren't buying dollars or shorting the euro last night or buying US dollar Norwegian kroner or getting long US dollar Mexican peso at 1890s, you might have been sleeping because you were in Europe. If you weren't doing all of that, if you weren't picking up at 10 o'clock last night, the dollar Mexican peso at 1893. Well, then, you should probably be in the Forex Analytics community. It's only $1 for 10 days, so make sure you check it out. But I want to say that now that I've done that, and I know a lot of us had played the dollar on the long side, I don't think right now is the time to just be initiating trades. People are going to be exiting positions as we go into this weekend. I mean, the market is probably a little lopsided, being long or short dollars. And as I pointed out last night on Twitter, I'm like, when the tide comes out and everybody's been selling dollars, you're going to see who doesn't have, who's not wearing underwear or who doesn't have enough dollars. And that's what we've seen overnight. We've seen a rush back into dollars as a result of that. But I think from this point on, you've got to see a further escalation in things. And like I just explained, from a military point of view, it's probably not going to happen. There's going to be threats, and we're going to see some drone attacks, and yes, you're going to see missiles hit certain strategic levels, but from a military point of view, unless they're gonna go after each other with nukes, which heaven forbid that happens. And I just don't see it. So I think that over the course of the next few days, we're going to see it subside a little bit. Let's all hope for that. All right. I just wanted to get all of that stuff out because I think it's important that if you're just trying to play the dollar on the long side right now, you are probably late to the party. I'm not saying that the euro can't go any lower. I'm not saying the Aussie can't go any lower, the sterling can't go any lower. But if you weren't picking those things off 100 pips ago, this is probably not the right time. All right. Okay. So I want to, since we have just about 5 minutes before Dale, has an interview. You do have an interview on a Friday, right, Dale?
Yeah.
Okay,
I
cool.
Dana.
Okay,
Yeah.
all right, cool. Dana's he's gonna be awesome to have here to get his institutional point of view in about
Yes.
5 minutes. So make sure you guys stick around for that. Because usually we don't have guests on Friday, so that's good. Again, I just want to say right here on the Live Squawk feed, this is probably one of the best things about getting up early in the morning. When we get up in the morning, Dale, it's tough, right? We've been
Yeah.
asleep. I try to get caught up on what happened overnight. So the first thing I do is I listen to the Flow Show. Obviously, I wanted to listen to what K-Man and Ryan were talking about because they woke up with the holy shit, what happened overnight? I want to wake up and go, what have they been experiencing just a couple hours before I woke up? So I listen to their show and then I scroll through Live Squawk and I go, okay, well, I went to bed here. Okay, what's happened since then? This is how I get caught up on my news overnight. And we have between that and the PIQ feed, which you can do the exact same thing with. You can go, oh, what happened overnight? Oh my God, these are the headlines. This is probably one of the best things about utilizing Forex Analytics first thing in the morning. I could read analysis too, which I do, but I do that in the chat room because that's where everything's posted. But now that we've kind of seen it all and we're here and we're faced the end of the week, and you got to think about positioning as we go into the end of the week. Ryan, what do you think we should be doing today? I mean, do we really care? I mean, first of all, next week we have the Fed, we have the BOJ next week. Both rate decisions are going to be really important. We have University of Michigan consumer sentiment happening later today. But what are you going to really be focused on for the remainder of the day? I've already wound down all my positions, so if I'm kind of coming in flat, what should we do?
Turn around and walk out flat.
So I think it's smart.
I mean,
right?
We've got all this kicking off, but we've also got a big old G7 meeting going on this weekend, and even countries outside of the G7 have been invited by Canada there. We've got Japan, Ishiba potentially having sideline talks with Trump. Everyone else is going to be trying to talk about trade deals and everything. So there's a lot of risk on that side as well. So it's a big old potential headline risk weekend. So I'm not looking to hold too much. I've got a little bit of Aussie dollar on. I'm really only going to trade beer pit trades today because I don't want to be sitting in anything that could get pinged by a big headline. So I'm just doing, maybe do a little bit of jobbing around and see what happens. But
so you got to think
close out before the close.
Those headlines hit while you were sleeping, right? I mean, if you guys were obviously asleep, most of you were asleep in Europe when all this stuff is happening. Yeah. A lot of the transactional stuff by Europeans probably has already gotten done, right? Like, well, like if you're based out of London, and you have some sort of hedge fund and you're like, holy shit, I have to unwind positions. You've already pretty much done what you needed to do by now, right?
Yeah, I mean, Euro hit its first low around about 11, 115.11, just sort of just while I was waking up. Then we got the bounce into 30s. Then you guys came in, gave it a second kick lower. That's caused a breakdown. Now we're getting a little bit of bounce on that. So yeah, every time zone comes in, has its reaction, and then we go into what next mode. and you're absolutely right to say, yeah, we're probably not going to get nukes flying around, but that doesn't mean Iran hasn't got a bigger capability than lobbing drones that always get shot down, which is what Israel's been worried about. So there could be still an escalation. I'm not going to risk that by betting against it over a weekend.
Yeah, right. And I want to make sure that we're very clear here. Guys, if nukes are going to happen, we're all dead. So just so you all know.
Yeah,
Everybody's human. And just as much as Iran's like, oh, I'm going to hit them with a nuke, they know that it would come right back to them and obliterate them. So as a human trying to preserve yourself and your people, they're not going to take that step. Let's hope. I mean, there's,
yeah. But
so
as I say, there's the in between. What they, look at a couple of months ago when we had this Israel stuff with Hamas and the Iranian bods and whatever. They lobbed drones at each other. They got shot down. They didn't hit areas that were vastly populated. It was all for show and chest pumping, and the market calmed down within 5 minutes. Okay,
yeah.
Israel's out on its own on this one. So, well, as far as it was, according to reports, they went without US backing. I think Trump's doing a little bit of backpedaling on his tweets this morning. I think he's been caught short in what Israel's going to do. And yeah, they've done it because they see greater capabilities from Iran, not necessarily nukes, more ballistic missiles and other stuff that's just as harmful. Well, obviously not as harmful as nukes, but, can be a step up from drones and whatnot. And that's why they've acted. So, yeah, we might get something, not nukes, but something in between the usual drone flinging and the nukes. And
This
that's, I
is
think, the
this
risk.
is the thing. This is the thing, and I'm sorry. I know Dale, we're bleeding over here, but this is Donald Trump's True Social. Saying, hey, you had 60 days. I told them what to do, but just couldn't get there. Now they have, but Marco Rubio was on. He was tweeting last night. The U.S. had no idea this was going to happen, and
Exactly.
then
And
and
now
then
he's coming
and
out
then he
after
puts
he
this
went
out
in.
this morning. I'm like, come on, man.
Yeah.
Like whose wool are you trying to pull over, Marco? That's ridiculous. Anyway, sorry, I can go off on a tangent, but I'm not going to. K-Man, last minute thought, and thank you, Ryan, for your thoughts. Really appreciate it. K-Man, last minute thoughts before the weekend.
Well, same here. Very cautious, but I'm actually, yeah, playing around very quickly with any adds to existing dollar shorts. And but yeah, I've had a little in dollar CAD, bought some euros on under 115, but those are already gone. I'm just keeping my positions as they were before. So yeah, very very shy in adding anything ahead of the weekend.
Yeah, I'm with you. All right. Well, thanks. Those are smart and very wise words from you guys. Appreciate you getting me up to speed. When I got up this morning, both Ryan and K-Man, thank you guys so much. And Dale, I just have to say, I know this is not, what you want to be right about, but man, you really nailed this whole Iranian situation all week. You've been kind of warning us, and I just want to say, great foresight. And it's not always it's not, in these types of situations, it's not like, I know it doesn't feel good to be right, but really great keeping all of us ahead of the curve here. So
I
Steve, I
feel
see
like
that.
I feel like
Okay.
Bobby Axelrod in
Bobby
Billion.
Axelrod from
Yeah,
Billions.
because he made his fortune after the first tower got hit and he started shorting airline stocks.
Oh yeah, yeah, this is yes, yeah.
Making money on, a crisis where people are dying.
You know,
Anyway,
the
go
good
ahead.
news, this is not, I mean, I know there's, bombs being lobbed back and
Yeah,
forth, but
there
like
aren't
I
a lot of
said,
casualties yet.
there haven't been. It's really more of a show of strength and, big dick swinging sword fight right now. So, let's just hope they just keep it at that. So
Yeah,
let's do that.
till the US gets pulled in.
Yeah.
So, thank you, team. Good job this week. What good? Excellent job this week, Ryan. Came in, Stell. I know you're not here, Blake. Um, Pretty good team we have here, guys, don't you think?
No
Anyway,
problem.
Yeah, so have a great weekend, team, and it's great to have Dana Lyons back. Dana is, I think, a great market tactician, and he fell out of the rotation, and I just wouldn't let him get away from the rotation. Dana, it's great to have you back here, and we missed some history together since you've been gone. I'm trying to unmute you. There you go.
Yeah, I got you.
Welcome back, bro.
Thank you, Dale. It's always great to be on with a show and great, uh, a great leader like yourself. But also, I know you have a great community of listeners and viewers and participants. So it's
Yeah.
always fun to talk markets with a
Trader instead of a
trader, a seasoned trader, but also, a serious community. So I appreciate it.
All right, man. Great. You and I missed that historic drop and then recovery in February, March, April, and down there I actually had those targets. That was the old breakout at 4,800. I couldn't buy it because of the confirmed momentum readings I was getting down there. It was so intense. I thought, normally when you have a 15 or RSI under 20, it'll come back and retest it, normally even take out that low. So how do you handle it?
Yeah, well, it's maybe rewinding a little bit. Our philosophy is we have objective quantitative models that we listen to, and
Right.
we learned long ago that the models are much smarter than we are. So that's the reason we devised quantitative models. So we have
Yeah.
actually black and white criteria to guide our investment decisions rather than trying to guess, especially you look at a tape like this morning, trying to guess what's going to happen, A, news wise or fundamental wise, and then B, trying to guess how the market's going to react to that news. So
Right.
we learned long ago it's best to decide what exactly the market is doing and listen to the market itself rather than to pontificate and try to guess. So back in December, when markets were hitting new highs, we actually got a sell signal in our risk model, which a lot of most of the inputs into our risk model are determining where the broad market is moving.
Right.
What's the majority of stocks doing? Are they going up or going down? And we had a little bit of a turn in early December, despite the strength in the
Yeah.
in indices. We
Yeah.
saw
With a few months of distribution, you don't turn a battleship around in a day.
Right. But we saw,
Yeah.
under below the surface, we saw some deterioration. So we
Yeah.
started getting out here right before that December drop, and then we had, like you said, some divergences here in January, February, as the indices were hitting new highs. Our models were not, and the majority of stocks were not. So we had a good opportunity at that point to get even more defensive. You can see this is the value line geometric,
Yeah.
which measures the median stock in the market. You see even more of a divergence here. So you had that spike into after the election into early December, and then a real drop off, and then really an abbreviated recovery in January. So we started getting very defensive there. So like you
Did you
mentioned.
go with any bearish ETFs on the side?
Yeah, for sure. Because we did have longs that we wanted to keep, but
Yeah.
we were substantially hedged. So we actually were probably net short during times, especially after that in March. We go back to the S&P after
So
that.
you actually had some of those on into the Liberation Day panic low. That was yeah,
Yeah, absolutely.
because I missed that.
We
Yeah.
were we made a stab at trying to form a low here in
Yeah.
early March.
Yeah.
Tested it, and on some of the other broader averages, there were even more substantial layers of support. So that post-liberation breakdown was substantial. So we came into it hedged, put on more shorts into the breakdown, and really survived this without almost unscathed into
You know how I knew you were there? Because you have one of the more unique views of money managers I've talked to, that you believe we're in a secular and a cyclical bull. So your eyes are always open to a failure to get out of the way because of your macro view. You still feel that way, even though it looks like we're going to make, could have a melt up to 7,000 later in the year?
Yeah, I'm not sure that we're in a secular bear right now. I
Okay.
think we're heading that way. But what our risk model basically operates what we call intermediate term. So
Okay.
usually on the matter of months. So that 2 to 6 to 8 month time frame is really what makes or breaks the market for us, and I think for investors in general, because it's that time frame you get moves large enough to try to capture or avoid. So like that the down moves from early in the year to April, you want to try to avoid that. Obviously, it's
Yeah.
worth it. You're not gonna try to avoid all these little wiggles and waggles along the way, but especially with our model getting us out, that was worth trying
Yeah,
to
that's 20% decline.
heck yeah. Um,
Yeah.
and then on the upside, this is where a lot of bears, I
Yeah.
think, wrong, where they don't recognize the cyclical bull markets, like you mentioned,
Yeah.
those bulls that can last from 6 months to even a couple of years, and can pick you up 40, 50, 60%. I mean, why would you not want to capture that? And I know a lot of perma bears that sat out the whole post financial crisis bull market because they're holding
Bearish.
on to the bearish beliefs.
Yeah,
But
their
as a money
narrative is,
manager managing real money, I can't afford to sit that out. You know what I mean?
yeah,
So
I do. So, the survival and thriving of your clients is equal to the same for you and your family.
yeah,
So,
and it trumps the notion of trying to be right. That
yeah,
my bearish narrative in the long term has to be right. I don't care if it's right or wrong. I just want to make money. And the
yeah.
one of the main reasons we did cover a lot of our shorts and started turning long down here was just the historic washout readings in terms of
Oh,
not
puts.
just momentum and price, but in terms of sentiment. Like
Yeah,
nobody was, even in March, nobody was bearish. But down here, into the depths of this, you saw some hedging and some bearishness come in to the scale that we've rarely seen before. You had a
yeah,
percentage of new lows on par with like the 5 highest readings in history. So
right.
at that point, you have to kind of pull the plug on the fact that okay, at this point, it's so bad it can't get much worse.
Yeah,
So and something like the VIX, the VIX, even the term structure of the VIX was one of the most egregious in history. So um, that had us turning around and not
okay.
necessarily buying aggressively, but covering aggressively and waiting for that opportunity to start buying aggressively. And we did get in late April, early May, our model did turn around, and we've been substantially long since. We do have about 20 to 25% cash because our model is still strong. We've just been waiting for a better opportunity, better risk reward
You think
opportunity.
we'll get one here,
Yeah,
Dana?
yeah, I mean, maybe we're starting to get one now. It
Yeah,
would take a lot for our model to turn negative. I don't think it will. I think
yeah,
we'll be set up for another substantial up leg. So that's what we're
right.
playing for right now until our model turns around, which means again, the broad majority of stocks are turning back down, and I don't see that. We're still of the mindset right now of deploying that extra 20 to 25% of cash on the long side and into some of the high relative names that have not
and
pulled
that's
back.
I haven't semis been the leadership on this recovery.
Semis have to some extent, but more kind of mean
MAGA.
reverting. So you look at some like the semiconductors, or it's funny, the broad market, which bleeds into our model and has us long because the broad market has been stronger. You see the semis have been, yes, strong over the last week or two, as well as something like the Russell 2000, the small caps have been strong over the last couple
Outperforming
weeks,
till the
but
last.
still, yeah,
Yeah.
still lagging overall, still hitting lower highs, still only up to like that 61 retracement in the 200-day.
Yeah.
But the thing that makes
I
us a little bit more optimistic, again, you look at our overall model, and this doesn't correlate perfectly, but it has a
oh
high
yeah, new
correlation.
all-time
Look at the
highs in the
AD
AD.
line
Yeah.
hitting
Yeah.
all-time highs. So that necessarily hasn't translated to strength, relative strength in the mid cap and small cap. So I think there's a chance that we see kind of a rotation into those broader averages. So that might happen next.
Yeah, so I see a lot of things. You showed value line, that was at 61.8. The semi, what we were just looking at before, was 61.8. So I mean, this would be the place that if you were bearish for just a correction to be attempting it, right?
Yeah, absolutely. And another
If you're a trader,
yeah, for sure. For
or
sure.
booking,
And
or how about taking profits from things that you got long in early April on? Do you do that?
absolutely, absolutely. And we have taken some profits, mostly in areas that I'm looking for. Let me find. I'm looking for another good short that popped up this week. The
BIOS.
right?
Yeah.
Kind of a dead cat looking bounce right into that
It-
61 and the
Yeah.
200 days. So there are good looking shorts like that. We're not going outright short. We're maintaining a healthy net long position, but
Yeah.
taking
So you lighten
some
up.
profits.
You're
And
short. Your short is lightening up on longs.
right now, as long as our model is constructive, which it is,
Yeah.
and some of the other areas we're taking some profits. There have been sectors that have been working great. Like you look at aerospace defense,
Wow.
already at that 161 extension. So these are the
Wow.
things we're taking some profits on. So things that hitting extensions to the upside. Because I think
What did the RSI get up to? 105? I'm kidding.
probably. And I don't know how this one's going to react today. It'll be interesting, but we did take some profits on this. But something like this, anything we get approaching those the former breakout levels would be we'd love to get back in. Give you one more example. Argentina's led the way for years. We've been on this. This one had a nice breakout, ran, and now it's pulling back. Now, if you're looking for something to buy, this is something that's at a good entry point, to especially took some profits, get back into something like this. And this there's a nice segue into one of our relative strength themes right now is international entities.
Yeah. Okay.
As good as the domestic market is set up, I think right now, for the intermediate term, I think the international markets are set up even better. You've got a
Because of the
breadth of
dollar.
market in Europe, and
Yeah.
Europe's leading the way, but across the globe, you've got markets set up for healthy extensions to the upside. So
India, Dana, looks like it could, was the strength and looks like it could be still an outperformer. But, I've heard that this only happens every 20 years or so. And a lot of this is because of the bear move we had in the dollar. Does that make you a dollar bear? I was, but covered all my dollar shorts yesterday and got long a little bit.
Yeah, I know you
in the
called it
dollar.
just right. And looking at the dollar, we had testing that Fibonacci support. So we'll see if this held. This is
Yeah,
a nice maybe a retest and then on confirmation if we get a bounce from here.
yeah,
We had some Fibonacci support I was looking at as well
yeah.
from
I
the
see your
COVID
trend
lows
line.
and from those
Yeah,
2008 lows. So I
yeah.
think you've called it great. I don't think the strength internationally, especially in Europe, is because of that.
Oh,
Typically
okay.
that strength is stems from a
Fiscal.
weak euro, and we haven't seen that. You see something like Germany
Yeah.
hitting all-time highs. Even the broader stock 600 has been strong, and typically, again, this is normally it's because of the weak euro, and at this point, it's been in spite of the dollar euro or the strong euro. But
Yeah.
you've got a number of ways to play it. Looking at um, just
Emerging
the
markets.
broad
So yeah,
uh, you look at just an unhedged EFA. So this is kind of a broad international. You look at the strength there, and
yeah.
that's not just because of any
Look at that
currency.
breakaway
You
gap
look at that.
there. Yeah.
Yeah, you look at that currency hedged EFA also hitting new highs. So I think it's
Oh,
actual
interesting.
legitimate international strength. So we're
Okay.
playing it both ways right now. We'll see. It ping pongs back and forth, but to have both ways actually hit new highs is I think a very strong sign for the international markets.
Did you get anything in oil shares before this Israeli attack? Uh, because I know most people did not like oils. The narrative was 40. But did you get some signals the last couple of weeks to do anything?
No, and I saw you called oil perfectly. We shorted. So here's the GSAI crude oil index. So we shorted on a breakdown of this.
Yeah,
Actually building up to it. We thought this was setting up the short. So we shorted here. Did cover some. We thought we had a little bit more downside, but looks like maybe after the spike, a false breakdown and a reversal in crude oil. So we'd be
yeah,
looking to get out of any remaining short. So um, net, we probably broke even on that one, but I think you called it just right, kind of the false breakdown and a reversal here. At least that's how I have to play it at this point.
I read that the silver miners are outperforming silver, and that says quite a lot. The miners have had a hell of a run. I
Miners
bet
have
you,
been great.
yeah,
And silver miners for one, might be a
yeah,
little extended. I do like it, and I like how kind of deliberate and kind of methodical the gold miners have been, because we've had
yeah,
along the way we had spikes,
yeah,
throughout the last several years that have been short lived. Now you've
yeah,
got kind of more of like I said, a deliberate higher highs, higher lows. You get a move to new highs, and we sustain those highs while we kind of consolidate, setting up that next up leg. So I do like
yeah.
the miners a lot here still. GDX,
Okay,
GDXJ, and also like you mentioned, SIL, maybe a little bit extended, but I do like the miners a lot as well. And I like uranium still. We had that nice move in
huge.
uranium.
Yeah,
Maybe it got a little bit ahead of itself. I'm not sure, but we just had a recent breakout above those multi-year highs. So I think a couple more points in URA is certainly possible before maybe a little bit of profit taking. But uranium space looks good to us as
yeah.
well.
Okay. How about we had that Moody's downgrade in TLT, and that was the low. Are we is the worm turning here in bonds, or is this just another bear market rally and should be in TBT, not
We've got
TLT?
no position. You mentioned the Moody's. It's funny. We keep looking for excuses for the equity market to pull back, and
Yeah,
deploy some more of that cash, and we haven't gotten anything yet. Those are the strongest markets that don't let you in. So maybe this
Yeah.
Iran issue, it's going to be an excuse for more of a prolonged sell-off and provide those entry points. But as far as bonds are concerned,
Yeah.
our contention is that
Secular
we
bull
bottom,
market.
yeah,
Yeah.
secular
Yeah.
bull in yields. That
Yeah.
2020 low was the that 30-year low, and we go up for decades, which I think we do. It's not going to be a straight line, but we've held this rally into 2023 pretty firmly. So they've pretty much gone sideways. Right now, I don't have any signals, kind of
Yeah,
middle
me
of the
either.
road. So no positions on right now in the bond market. Wouldn't be surprised to see another rally in bonds and pullback in yields, maybe towards that 3.25 range
Okay.
in the 10-year before that next major up move in yields. But longer term, yes, certainly think we're heading back up probably into the teens eventually.
Okay. Well, Dana, I tell you what, it's so great to catch up with you and people that are watching you this live on X and YouTube, etc., or watch a recording later. Best way to get a hold of you, and why don't you go to your website and show
Yeah,
people what
sure.
you do with your quant.
Yeah, absolutely. So our obviously, our core business is managing money. We have a registered investment advisor in J Lyons Fund Management. So that's our core business.
Yeah.
For the trading community, we do have this service, the Lion's Share, which basically every day we give you kind of a primer on what we're looking at the trade, and then throughout the day we give actual trades that portfolio allocations that we're making. It's on you to keep up with that and pull the levers yourself. But it's a good product for traders who are at the switch 24/7.
Okay.
Otherwise,
Cool.
our money management business is good for passive investors who want a manager that actively manages risk, and especially those that espouse that bearish long-term negative narrative like we do, but want to capture those good times as well.
Okay. So what's your night job? I see your day job is here at J Lyons Fund Management, but
Yeah,
what's your night job?
my night job is coaching baseball and softball for my son and two girls. So
Okay.
at night you'll find me on a baseball field or a softball field.
Well, yeah, that's not a job. That's a
No,
blessing.
no, it
So
is.
anyway, Dana, great catching up with you, guys. I think Dana's top drawer elite in what he does, and maybe I'm being subjective because he's a Chicagoan. So that's I want to thank you, and we'll talk again like in August. Dana, good luck this summer. Good hunting, and great to talk to you, my trading warrior brother. Really great.
Appreciate it. Always great talking to you, Dale, and you got a sharp community there. So really appreciate being on.
All right. Well, you add to it. Thanks for edifying F.A.C.E today. And everyone, don't just count your ETFs, count your blessings. And good hunting the rest of the day. See everyone Monday. Adios. Thanks again, bro.